Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. I haven't been on recently because I've had this terrible cold, as you can hear. Luckily, it's just a cold, but I wanted to give you an update. It's been a couple of weeks, and with that, let's get into it. First, I want to take a quick look at the S&P 500. As I mentioned a few weeks ago, that on a longer term basis, I'm not bullish on the equity market. As you can see, here's the bullish channel, and we were way overbought, as I talked about 2 weeks ago, which was actually at the peak, and was pointing out the negative divergence. As prices are hitting higher highs, we're getting lower highs on our relative strength index, suggesting that the underlying strength was weakening. And also, I wanted to point out last week we had really big volume. And so that's kind of showing a change of character for the market. But normally, from bullish to maybe bearish. And so when you get a negative divergence like this over I don't know, an 8 month time frame, and then on the longer term chart of the S&P, we have a 4.5 year negative divergence, which I talked about. You know, eventually I'll be making a bearish call on the overall equity market, which I'm not doing yet. I haven't. What I actually did say 2 weeks ago was that I was short-term bullish into year end, but just keep this in mind that we do have these negative divergences, and at some point, probably early next year, I'll be looking for things to short, and will be looking for defensive equity uh, holdings as well as others. Here's why I'm still bullish in the year end. This is from Equity Clock. This is the S&P 500 future seasonality. And you can see we normally get a dip into the middle of December, and then we get a uptick in the year end. So that was one of the reasons why I suggested a bullish year-end finish, and I do think that prices have a good chance of going up into that year-end. Maybe not new highs, but there should be some gains ahead. But I also want to point out seasonality into January, and then after a little bit uh, of a snapback, we get lower prices. And this is just a tendency. Seasonality is just a tendency. It's one thing in a technician's toolbox that I look at to kind of put the puzzle together. This was the other reason that I was looking for a snapback, that I was looking for an uptrend in the year end. We were a couple of weeks ago, we were down around this level on the McClellan oscillator. Tom McClellan's parents and created this back in the 70s, I believe. And it's looking at supply and demand and up volume versus down volume. But when you get really oversold readings down around this dotted line, horizontal line, it usually marks a bottom. But then we got the huge down day. What was that? 3 days ago, to finish off the down move. And now we're getting, well, then we had the big up day on Friday, but it still looks like we could get a few more updates here to alleviate this oversold condition. You can see how historically this has worked. So that's just some background on the S&P 500. I'm not making a call on any of this. I had three buy recommendations that I was stopped out on over the last 2 weeks. This TLT and fixed income being one of them. Uh, when I left you a couple of weeks ago, we had broken out above our confluence of moving averages, and now we've had two big down weeks in a row. Here's where we initiated a buy here, sold here, initiated a buy here, and now we're stopped out at 88.31, taking a loss, small loss. This is a 20-year Treasury ETF, but most fixed income looks pretty dicey. If I was going to buy fixed income, I would buy short maturities. Actually, I'd buy a T-bill money market that's paying you 5% with no interest rate risk. So stopped out of this. This is a surprise. This is the energy stock ETF XLE, big pattern. One, 2.5 years in the making, an ascending triangle, a flat top, a rising support line. And the prices broke out. I suggested buying that. And then as they were shooting up these last few weeks, and the last time that I was on, I was saying, you should be selling into some of this strength because whenever you get a big 5% up week, if you have 100 shares of something and you get a 5% move in an index, I'd sell 5% or 10%, whatever your risk parameters are. So, but we're stopped out. So, unfortunately, this did not work. And but with the market kind of teetering next year going into a challenging year, I think it's better to take my loss and run. And the whole key here is to cut your losses short and to let your winners run. So when something has a big up move, you sell some, but you let most of it run. And when it doesn't work out, you want to cut your losses short. REITs, IYR, the iShares US Real Estate ETF, big inverse head and shoulders here. 2 years in the making. Normally, the larger patterns are more reliable. And so, here's where we bought back on July 5th, and we had a smaller inverse head and shoulders within the larger one developing. So we bought down here at 88. We got big up moves, and I was saying selling, sell some, sell some, sell some. And then we got a pullback, and I raised my stop from way down about 84 to up here at 96 or so. I didn't want to give back my gains. The price projection of this pattern is 112, however, and we're just back to retesting that breakout. However, we were stopped out, and so we still had a gain, but unfortunately, I gave back quite a bit of that. That's what happens in bear markets if we're getting close to one. China, the iShares China large cap ETF, FXI, another inverse head and shoulders pattern here spanning 2 years, well, about a year and a half. And here's where we bought based on a smaller pattern while this was developing. When it broke out of this, it suggests a $39 price projection. And I think this was the largest equity move for an index in history. I think I heard CNBC or Bloomberg or somebody say, and I was on a call here saying, you should be selling some, selling some, selling some. And then as prices came down, I've been on the call saying, I'd be buying, I'd be buying, I'd be buying. And then not this week, but the week before, we had I think it was about a 10% move upwards. And if I was on the call, I would have been telling you to sell some, but we're still holding our stop here at 29, and the pattern still looks good. The thing I worry about FXI is that these ETFs that track China don't always go in tandem with, say, the Shanghai index. So if we get into a sloppy market here, it could affect the share price of FXI, even if the Shanghai index is going up. So we want to monitor this very closely, but it's still intact. And here's probably the most speculative suggestion I have, Tencent Holdings. This is a big China technology company, and it had a big ascending triangle 2 years in the making, had a breakout. It came back, retested that breakout, and then we had a big up week last week. And I was selling a little bit, because everything's so tedious right now. Just selling a few shares. Whenever it's up, selling a few shares. If it goes down, I'll buy a couple of those shares back, or however. It depends on your investment style, but I'm just giving you some things to think about. Microsoft, one of my latest buy recommendations. If our market's going to continue higher, certainly Microsoft's going to lead. The buy point wasn't the best. This is a big symmetrical triangle. And once it broke out, the price projection is 517. And I suggested buying at 444. I would have rather bought down here. Anyway, prices came up, they came back down, they bounced off the resistance level of the old symmetrical triangle, which is now support. But I'm raising my stop up to 425. Again, I want to keep any losses short. If the market's going to get that volatile on us, then I just don't want to take big losses. So that's where I'm at right now. It's still intact. Last but not least, Excelon. This is probably the most comfortable holding because even if we get into a bear market, utilities will do better than the overall averages. And so here we have a descending triangle with a flat bottom and a descending resistance line. Prices broke out, put a buy rating on it. It's come down. We had a nice big bullish hammer here that's in Japanese candlestick terms, where prices open up closer to the top and then trade way down. And by the end of the week, they're back up near the top. That means there's buyers trying to support that. And the upside here is big on all these patterns. They're all big. It's just whether the market is going to hold up or not. So I still got my stop at 36 and I have a $51 price projection. Oh, Mattel, the toy maker. Here we go. This is a symmetrical triangle. And again, a 2-year pattern. And we recommended it right on the breakout. And it slightly broke, but I'm still maintaining my buy rating. It just can't go down any lower than last week's low. If it does, I'm out. I'm taking my loss. I'm running. So that's on the border. And if we get into a down market, I'd rather get stopped out of these things with small losses. Two commodities that I want to talk about is platinum. And again, this is a big consolidation pattern in a symmetrical triangle form, and it's been holding right on our stop level at 85. And so I really don't want to see it go down from here. It could easily go down to 80 to the support level, and I don't want to take that kind of a down move. So I'm watching that very closely. I'm not buying any more of platinum at this point. And the same with copper. Copper traded very successfully, bought it here back on an inverse head and shoulders patterns, went neutral way up here with a huge move, tried to get back in here, got stopped out of a smaller pattern here, tried to buy it again, and here we are. We got overhead resistance with a confluence of moving averages, and 25 looks doable here on copper. Um, so I'm going to give this a little bit of room though with a 24.5 stop. So this volatility is throwing a wrench in things. Um, that happens, and I think a lot of these patterns still look solid, but the market's got to hold up. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Have a great rest of your weekend. Good trading this week, and I'll be on during the week. Have a great evening.